if you're in a situation where you are completely mortgage stressed, and then selling might be an option. We've found now that in a lot of areas in Hobart, renting is actually cheaper again than it is to buy.
Going once, going twice, sold. You're listening to the Property Pod.
All right, guys, welcome back to the Property Pod, your weekly engagement into real estate here in the Hobart marketplace. I am your host, Aaron Horn, and I am only joined by one team member today. Our illustrious leader is elsewhere in the globe, but welcome to the show, John McGregor.
Hey, mate.
How are you?
Good. Although, as we've just soon discovered, like, my filing cabinet of my brain is just locked this morning.
It's funny, you're like, we're going through things and you're calling a certain TV show, like it's close, like you're like centimetres away from you, like, have you seen that show Band of Heroes or, that show Money? I'm just like...
No, Billions.
Yeah, Billions, Band of Brothers, yeah.
Well, even with obviously Sam's got his new Raptor, which is red. It's a pretty bloody good car. And I didn't realise there is like a 2-year wait.
Yeah, I didn't realise that either. Yeah, well, I know he's been waiting for donkeys to get it.
Yeah,
but no,
well, that was 12 months. So I mean, God help all those that are trying to buy one now.
Well, I guess Raptors are a rare breed. It's kind of hard to find them.
Which is where, like, they're trying to think of redheads' names. I know
another rare breed.
Yeah, another redhead. That's why I was trying to think of like, I couldn't get Rick Astley out. I couldn't get Jimmy Somerville. I couldn't get because he's trying to.
Is Rick Astley a redhead?
Yeah,
is he?
I typed in. Look, it was because I was trying to remember
famous redheads.
Rick Astley popped up.
Oh, there you go.
Like, now, if you get a name of Raptor after Rick Astley, I don't think that's such a bad idea. The other ones that came out were Lindsay Lohan.
Yeah. Did your brother come up?
No, not yet.
No, damn it. We'll get him there.
It could be Lukey. Anyway, so like that's what I find with my brain, and it's so funny working with your parents for so long. Is it? You see all the mannerisms of where
you've picked up all your little traits from.
And Dad's brain must be exactly the same, because I liken it to a filing cabinet where it's there and it's like you can't get the key. And it's just trying to jam it while you're trying to get out.
Get it out. Just shake it. Or it's like turn it off and turn it on again. Like sometimes it is the thing that pays off.
Yeah. So anyway, but how you doing?
Yeah, not too bad. I've had a few sick kids at home, which has been throwing everything out through the loop. But I did get to watch the Bombers play yesterday in the Anzac Day match. Unfortunately,
it was
rolled at the end. It was a good game. I finally got my little man into thinking that football might be interesting enough. Yeah, he watched it for a little bit and he said, "Which one do you like, Daddy?" I said, "Oh, the red and the blacks." But I text some friends. Do you remember back in the day watching it up at Dado's house you and Dado would just turn on tone? At the end of the game, I said, "Man, I wish we were at Kieran Court so you could just beat up Tony right now." That smug bastard.
It was. He always got beat up.
He always got beat up. I don't know why he came every year. I think he came just for that moment of joy if they did win.
Because even when he lost, it still.
Yeah, no, not a chance.
I forgot about that memory.
So, Anzac Day, got up for the dawn service and enjoyed that. It was a beautiful morning yesterday and, nice to pay respects to all the Anzacs. And, so it's been an interesting week. It's so funny that you've said that your filing cabinet's not working, because I've got your shoulders are very heavy today because I came in and said, I haven't planned anything for the show. It's all on you. What do you got for me?
Well, immediately... The thought that came to mind was the amount of over the last few months, the amount of properties have just been harder to move, and that's not even on the for us, but for both clients, for buyers and sellers. Purchasers are struggling to get get their homes, and we had I've got a property at the moment up at Brindaston. It's 2 contracts have fallen through, and the thought was, what did I say to you? What
do you do when your deal falls over, or what do you do?
What do you do when the deal falls through?
Yeah, that's it. Yeah, it did have a fancy ring to it.
Yeah. Couldn't come up with something more corny if I tried. Yeah. So I thought it might be fun to. Well, I'm not sure if it's a fun topic, but there is sometimes you got to know when to call it quits sometimes, and
and when to push forward. Yeah. So what do you do when the deal falls through? Because obviously that's when having an agent on your side is kind of very advantageous to be like, all right, this deal is worth pushing forward. This one's not worth following up on. So kind of run us through a few scenarios.
It's a good way to put it, because I think at these markets, your role with working with any kind of professional is essential, because, we've all got a limited amount of knowledge on a lot of things. But it's when things get complex is when you need assistance with someone who's specialised.
Sure.
So to give you an old example, we had a few examples actually. So many years ago, Pat and I worked with a client up at Brighton where we co-joined the listings because he was friends with their family and I'd known him for a long time as well.
Yeah, so this is prior to you guys all working together under the 414 Property Co banner. You're working for First National Real Estate, McGregor, their 414 Real Estate.
And I think we're going back to nearly 2013, 2012.
Oh, wow. So, we're young whippersnappers. Like, Pat's still got spiky hair coming out of his...
Turns out we had the exact same suit from YD as well.
The $60 special.
Yeah. And I have to say too, like Pat looks so much better in his just shorts and shirt. Like to see him in a suit he looks uncomfortable.
I do go back to some of the old videos every now and then and look, I'm just like, that guy just not look comfortable. Like that's not his thing. Not his style at all. Not his thing. So shout out to him.
So what happened though is the guy bought it and had refinanced to purchase other things, and in the meantime, what we were able to sell the property for, I think, was about $285.
Yep.
But what we didn't know at the time was his loans were $300. So he'd actually used equity in that house, and the bank had lent, higher than the value of the home because the market had adjusted.
Yep.
And what we now I ask better questions, I suppose, in this process because this is the first time I even thought. I didn't even know that was
that was a thing that could happen. You kind of just were, I guess, still cutting your teeth and learning a few of the ins and outs.
Sure. Yeah, and I guess we were too young to have experienced a market where prices had come off their highs as well. So what happened was when we actually secured a contract, in the Tasmanian contract, because he couldn't pay out the loan for the bank, and when you purchase a property, the bank will take out a covenant on your title, which just basically says that they have a vested interest in it.
Yep.
And before they will allow you to release that title, they have to be paid out first.
Okay, yeah, sure.
Yeah,
totally makes sense.
In the Tassie contract, it refers to the purchaser the vendor must provide a good marketable documentary of the title. I don't know what that's worded in the other states.
Yep.
But what happened was finance was approved, everything was unconditional, and then on his part, he couldn't actually he couldn't sell.
Yeah.
Because the bank wouldn't release him from the property. So it was an interesting one where the buyer was able to complete in this case, but the owner wasn't.
Part. Yeah,
and it wasn't that either party wanted to be able to actually not sell. So the bank was said, nah.
Yeah.
So the only way that he'd be able to get out of that situation is if let's just say there's just an easy number. Imagine there was $50,000 difference that had to be made up.
Sure.
The only way he would be able to get out of that contract is that he'd have to come up with that $50,000 in cash.
And basically, pay off that last part of the debt.
Yep. So that way the bank could be released.
Yeah, wow.
So in his particular situation, he couldn't do it. So he had to stay.
Yeah.
And it wasn't until 6-7 years later when the market had changed again, where he was then able to sell the property. He'd been able to pay off the debts a bit further. And then the house was worth a little bit more, and we could finally sell it, and then he could move on.
I guess that's kind of, I don't know if this is so far off where we were going to take this conversation. Is that kind of something that might be happening in this kind of next little period where a bunch of these fixed term loans that were kind of fixed at, I don't know, mine's at 1.8 or something percent, and something I think like you said before, you're paying 6% on yours or something?
So because we tried to before it gets refinanced, mine was adjusted to I'll just say 2.5, I think.
Yep.
And then they basically gave me the most expensive product they basically have.
Yeah.
Without, so that just automatically transfers. So they went, great. Yeah, you had your fixed deal. Now we'll give you the most expensive product we have, which was 6.5%.
Yeah, yeah.
And you could now when speaking with the broker, I'll be able to get it to about 5. But you're right. Think about the difference in yours. What's that? Times the size of the interest rate?
Yeah, I would have no idea how we're trying to balance the books at the moment and try and keep in front of that, and we easily know that this is going to be the number for the last few years. This is how much we're paying off our repayments. So, are we getting close to this point where there's going to be all this stress on people and they're going to be selling for I know we've talked hardship. I don't know if I'm way off base with where you were talking about this other guy who's selling for some reason that he's got to get rid of his place. He's $50,000 short in our example.
Yep.
Is that something that we could be seeing in a few months' time?
It seems that way. I think they're talking about now with the I can't remember what it's like a mortgage trapper. It's like a mortgage strangler. They've got a fancy word for it. The reality is though is the people have purchased to their highest capacity at the time, and then the cost of they've gone from these really appealing interest rates to really high.
Yeah.
Which is so it's going to really put on a huge stress on the household, because if all of a sudden your expenses go up by 12 grand a year, for example, $1,000 a month,
Yeah.
and your wages haven't changed, man, it's big.
That's huge.
And there could be more on people that have purchased houses like worth $1 million, which is average if you're in Sydney.
Yeah, exactly. Yeah, like in our little market, it's a 2% on my $300,000 loan is completely different to pumping up 5% on $1 million loan.
That's it.
It's yeah.
Well, this is where the I suppose the concern came, because they one of the articles I was just they're talking about they always had that buffer. So even at ours, like we just said 2.5%, they're assessing me on 4.5%.
Yeah.
What I suppose those buffers didn't anticipate that there was going to go a 2% above even their original buffer.
Yes.
And so what's happening is for people is they are they've got themselves into a loan at that lower rate.
Yep.
But because now they still have got that buffer applied, even now, is it now like imagine they're trying to refinance to 5%, but they're assessing you at 7%. And then your income and your expenses are nothing like that's changed, and so they're actually not able to refinance, and that's the struggle that a lot of people are having.
Yeah, so I guess like going back to like these deals falling over, is this something that you're going to have to navigate with kind of talking with brokers more and spending more time trying to get into the nitty gritty of things? Like you've said, you had was it one of Ryan Daston or something's fallen over 2 times? Has that got something to do with?
Well, that one's a completely different story. The one that was interesting for 2 different reasons, actually. The third example just recently was I was chatting with my broker, and he mentioned that there was a couple that were attempting to purchase a home through another one, and they didn't. They weren't able to get it.
Yep.
And the main reason is they're not due to mortgage stress, but they hadn't been given the option of bridging finance, which enables you to bridge the gap between 2 properties.
Okay.
For a short period of time while one sells or settles. You've got the finance of the other one.
Okay, so say you've got like a 4-day window or maybe even longer.
Yeah.
You've kind of got a slush fund.
Yeah, well, no, it's kind of like, okay, I own my house at the moment. I want to buy another one. I'm probably going to really bastardize this.
That's all right. We've already established that your filing cabinet's running low today.
Running low anyway. But in theory, though, it's like, okay, I can still buy and secure that home. And then you've got the finance across both properties while this one starts to sell. So it's different than subject to sale. That's everything falls through at the same time.
Yep.
I'm essentially paying for 2 properties for a brief period of time. So that so the thing is, it's only on a limited time frame because you couldn't do it.
Yes, you couldn't. Yeah, constantly be.
But they weren't even given that advice.
Okay.
So I had another young couple where one of the brokers had said, "Look, we can get you pre-approved for finance, but it's good then it'll cost you some money." And he said, "Mate, well, that's just straight up illegal. You can't."
So say that again. He said that they'd have to pay to be pre-approved.
Yeah. There was not our broker, but another. And he said, "Well, I asked him about it. I thought that sounds a bit sketchy."
Yeah.
He said, "Yeah, no, that's just straight up illegal. It's right against the Lending Act."
Yeah.
So this young couple were sitting there going, "Oh, well, we're not quite know what we want yet because we don't want to sit there and have to pay a fee just to,
to be told that we're
like, well,
eligible."
No. I said, well, look. Let me ask a question there because that sounds a bit sketchy.
Yeah.
But in their case, like they weren't proceeding further because they weren't confident they didn't want to have to pay a fee just to get pre-approved, not knowing that that's completely illegal, and they were getting stitched by unscrupulous.
Yeah, sounds very dodgy.
Yeah.
We should do a current affair.
That'd be fantastic.
Yeah.
We'll film him secretly where he's walking slowly in grey.
Exactly. And then something comes up at the bottom just saying like, scammer.
the big stare.
Yeah.
With the financial situation, back to your point, there's a lot of people that the valuations had come in at very high. Let's just say the valuation for a loan on a house was $700,000.
Sure.
So they were able to borrow up to $700,000, but now the resale value is $650,000.
Yep.
So now not only are they paying interest rates on a house that borrowed up to $700,000 for, but they can't sell it for the same value at which they borrowed it at.
Sure.
So what's happening then is when they go to refinance, they haven't improved their their financial situation in terms of expenses because they've all gone up.
Yep.
They may not have increased their income. Now the house is worth less, and the interest rates are higher. And so the problem is when they go to refinance after getting stitched on going off fixed, they can't renegotiate a better fee.
Yeah, it sounds like the perfect storm of.
So it's going to be really, really, really interesting. So what they're making comments on, when I say they, was just advice to the Reserve Bank, you'd say, or the lending practices, is that, well, okay, all of a sudden these guys are already paying 6.5%, so they're getting hammered. And now they want to refinance, but you're stress testing them to 8.5%. So how
their buffer has gotten wider.
How can they, bridge that gap in that respect?
Yeah,
so,
sure.
That's where, having, I suppose speaking to a broker who's going to try and, when I was chatting to Dave about it, it's like, well, just you need someone who's going to try and give you options.
This is Dave McGuinness at MoneyQuest.
MoneyQuest, yeah. Because he called me on the public holiday. I was like, sweet, thank you. He's been working for me. So there's the only, I suppose, when it comes to buying and selling then is that what do you do in those scenarios? Now that's a really hard one that's going to be to answer in very tough specifics.
Yeah.
Because if you're in a situation where you are completely mortgage stressed, and then selling might be an option. We've found now that in a lot of areas in Hobart, renting is actually cheaper again than it is to buy, whereas that was sort of in reverse for a number.
Yeah, so just like kind of the last few years, that seemed to be the reverse of the thing where it was like you're paying off your mortgages cheaper than your rentals. Has that switched on it? Like
in certain areas, yeah.
Okay, cool.
Yeah, in terms of pure numbers.
Yep.
I know for a fact with the one that we bought for a partner's friend just to live in, what she pays in rent isn't anywhere close to paying the remortgage payment.
Okay, for sure.
But she needed a place, so we helped out.
Yeah.
So I think, I don't know where to take it from.
I guess I just wasn't. I wasn't aware that, because I guess is that based on the mortgage repayments now are higher because of the interest rates that's blown out that idea of, because obviously when I purchased it was cheaper than renting because I could get such a low interest rate. Now that it's going to blow out to say your 5%, it's going to push my. I'm so bad with example numbers, but say it was $300, going to push that out to $450. Once all those things bump up, is that how the rental prices are now just that little bit lower?
Well, I heard, this is an anecdotal example from my dad back in the late 90s where they'd experienced an adjustment of 10% on house values.
Yep.
And no one was actually wanting to purchase property in Hobart at the time.
Okay.
And they had a massive influx of properties come back onto the rental market because they couldn't sell. No one was buying. And it wasn't until the interest rates were reduced in the early 2000s where we experienced what they called the first modern day boom.
Yep.
The prices went up 350% locally. That all those rental properties that people were hanging on to previously, they were like, oh, sweet, now I can finally sell them.
Yeah.
So the amount of transactions were at least double back then, even what we had last boom,
okay,
in terms of volume of actual transactions.
Yep.
But this time, I suppose what's different is it may not happen the same because people have got alternatives, and maybe will we see people moving sideways and doing Airbnb?
Yeah, for sure.
People doing sideways or putting those properties into the rental market, especially if they can't see it. So, I mean, when it happened to me, when I had my first unit, I think only at the time by the time everything was, I had other debts, and then I had my house, and that the interest rates got to, I think, 8.5% on that one. Obviously, it was much lesser value.
Yeah.
And then I had my mate staying with me, so the only thing I had to live off was pretty much the $75 in cash he was paying me. The rest of it was just I was dead in the water. I was going backwards.
Yeah, well, I guess that's kind of where it's getting tricky, and I know we haven't really covered off on a bunch of that. We've maybe spoken about cost of living, just riffing around. So I guess at the start of the show, we were talking about when a deal doesn't go through.
Yeah.
Did we cover it off?
Not really.
No. I know we talked around a lot of stuff, but not really what we said we were going to.
We're talking a lot, but saying very little.
Yeah, oh yeah. If you've made it this far in the show,
yeah. Good luck.
Shout out to you. What? Just before we sign off, what can you do if you're trying to purchase a property? I know this is not what we cover.
All right, well,
what can you do if you're trying to purchase a property or if you're selling and it does seem to fall through. Just give us some button points so that we can say that we covered off on our goal.
My quick checklist would be first speak to a broker, and it may not be your current bank, especially if they're just trying to push a specific product.
Yep.
Go seek an independent broker then who's capable of trying to give you some alternative options.
Yep, like that.
Secondly, if you are considering, if you are in a bad situation, grab it, get in an agent. Okay, what are your options? Can we sell? Can we buy? Can we lease out? I suppose this is about if you're owning.
Yep.
Can you rent it out? Can we find alternatives? So I've got like an actual breakdown of changeover costs. So it's like, okay, this is where you're at. This is what you could be, and this is where it's going to be. Once it's ended. So at least then, it's about reassessing your financial situation. I'm not going to worry about giving unsolicited advice around budgeting. I think people can make their own call on that. But then the other thing too is, if you can't refinance and you have to sell, like they're probably your best buddies to go, okay, giving you bigger options.
Yep.
And then I suppose how you navigate that through, like, okay, do you get someone to rent even just one room in your house?
Yeah, for
if
sure.
If you've got a 4-bedroom house, it's like, we've got this spare room that I just kept a few little bit of junks in. Why not lease it out for $200 a week?
Yep.
$100 a week.
Look into some different options.
But find ways to, I suppose, adapt your home that can enable you to get a little bit more, get more value out of it. And then when you're buying though, the other thing too is, I know they're getting a lot. Their assessment tools are a lot better than they used to be about a quick little disclosure on your expenses on a piece of paper. And
How much do you spend on this? How much do you spend on that?
Like with my refinancing now, like it linked to my bank accounts, so they've just got the full disclosure and all that kind of stuff.
Exactly.
Which is it's like, it is what it is.
It's probably better that they have the exact numbers than you say, like, I think I spend $200 on takeaway a month, and then you're like, oh crap, I spend $900 on takeaway a month. Like, I'm so far off my mark, but it's not that much every time I do it.
Well, that's I guess the two options of either saving more money or using guarantors. I know we've talked about that kind of stuff before, but one thing I'd probably look at again is this sounds awful. Readjust your expectations.
Yep.
If purchasing's a route that you really want to go down, the good thing I suppose is if you're returning with confidence, knowing that the interest rates aren't going to double again, you're already planned where other people are getting hit by. Yeah,
they're thinking that I was in a really good spot and now I'm blown out of the water. If you think now I'm safe where I'm at, it's not going to extend out to 12% or something.
That's it. If as locally, I mean, our market is definitely stabilised. It's the good thing is because there's no longer that fear of missing out. Allow yourself to be a little bit patient. Allow yourself to find that little bit of a better deal. Allow yourself to be a little bit more confident in a negotiation.
Yep.
Just yesterday we caught up with a couple who put in a offer well below asking price. Look, that's fine. That's the want to move. We'll slowly bring a deal together. I know, but obviously it's going to take, because they're very patient, very savvy. So it'll take a little bit of time. And if you are doing that, you're not confident. Again, seek advice from someone who can help you negotiate.
Yep.
So at least then, if you are purchasing, it's always an encouragement to try and secure the property at a as a better deal you can. That's absolutely something you should search to do. But try and ensure that you still don't stretch yourself.
Yes.
Okay, just because you can borrow up to that limit. This all of a sudden, you'll go, it's really disappointing because if we could just get that little bit more.
Yeah, if I could maybe I could get an extra 20K on top of that, like just to have a little play with.
Yeah, but the only thing is though, is that yes, you've been able to get that, but now what happens when something goes wrong?
Exactly.
And I guess it's really unfortunate because if I'm not careful, I could absolutely get myself in that same situation with our two properties now.
Yep.
That we did for family. That got to ensure that you've got a buffer, worst case scenario, because what we may actually see what happened to my friend many moons ago, where people were borrowing above what their real capacity of that house is.
Yep.
Now things have adjusted. And now they're trapped, so trying to ensure that, get all those advice correct at the start so that worst case scenario, you won't get trapped down the road.
Yep. So the biggest takeaway is we talked around a lot of stuff, but talk to an expert or talk to somebody.
Yes, advice.
Don't listen to this. You can talk to people. It doesn't cost a thing to talk to people, like the people that got in trouble or got told they'd have to pay for the pre-approval. Doesn't cost a thing just to have a conversation and find out your options. So, reach out to some people and find out more from them.
Yeah.
Obviously, some airy-fairy conversations in a podcast studio. Don't go off those. Once you've got the info in front of you, there's definitely ways of finding out the correct means. And just think about it. He's got this whole show on his shoulders today. He's got a broken
the
filing cabinet.
The filing cabinet's jammed. I reckon we would have had more success had we talked about Band of Brothers.
Yeah, and I would have enjoyed that 1,000 times more than just being like, I'm floundering here, man. But yes, thank you for the show. Hopefully, Pat will come back and save us next week. Actually, no, he won't be back next week. He'll be still in the Philippines. Looking forward to more ramblings of the idiots. Yeah. All right, see you. You have been listening to the Property Pod, recorded and edited by 414 Media House in conjunction with 414 Property Code.
This podcast is general information only, and the thoughts and views expressed is the opinion of our panel, and listeners should always seek and use their own investigation into any topic we discuss to ensure they fully understand their own situation.
It does not constitute and should not be relied on as purchasing, selling, financial or investment advice or recommendations, express or implied, and it should not be used as an invitation to take up any agent or investment services. No investment decision or activity should be undertaken on the basis of this information without first seeking qualified and professional advice.